What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on Tesla stock.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on the price chart and how we get there. Then we'll continue with the fundamental news that might drive the price of this company. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you what should we expect next. And before we get into all of that, if you guys would like to earn 2 free stocks with Moomoo valued up to $7,000, please check out that link in the description below. All you have to do is sign up for an account and deposit as little as $1. This is guaranteed free money. Full details you can see on the screen right now. So let's start with the price chart. I made my previous video right here at this point and I've told you that we had a very good bounce from the range of $691.16. It is the previous swing low, as you can see right here, that we reached on February 23rd. And I've told you that because of this volume we might have a next leg to the upside, and this leg might be the real bottom for the entire retracement. And we also had this touch as the double bottom pattern, and it is also very bullish pattern. And I have to say that for now we have this retracement on the first glance that reaches, let me show it to you. If I pull the Fibonacci retracement tool from this bottom to this top, as you can see, we reach exactly the range of golden pocket, statistically the most probable range of trend reversal. But in my technical analysis, I will show you that it might be not the case. And definitely for now we have more uncertainty on the markets related directly to Tesla and to its CEO Elon Musk. And I have to say that because of these headwinds, we might see much longer consolidation phase, and probably we might see even lower prices for Tesla. So I will show you what should we expect next from the technical standpoint in just several minutes, and for now let's continue with the fundamental news. First of all, let me show you this article. We are on Yahoo Finance, and this article was published on May 16th, and it's titled "Elon Musk is using a Dog ate the homework excuse to potentially back out of buying Twitter, and there is now a less than 50% chance the deal gets done," Whitbush says. And let me quote you this. Musk, who plans to put up a big chunk of his Tesla stake to finance the Twitter buyout, raised concerns last week about the proliferation of bots on the social media platform, adding that until his concern was sorted out, the deal would be on hold. Musk's sudden concern about bots sent Twitter shares plunging 10% on Friday. Eves said he viewed Musk's concern about bots as a dog ate the homework excuse that the billionaire could use to either back out of the deal or lower the price of his proposed buyout at $54.2 a share. And in my opinion, Elon Musk don't want to back out of the deal, but he definitely wants to make the price of Twitter lower. Because with the bear market that we are experiencing right now, the price of $54.2 is very expensive. And on top of that, he has to make this deal partially with the Tesla shares as the collateral for financing. And that is why Tesla is also moving south. On top of that, let me show you this. Musk's apparent pause on the deal until he is comfortable with the bot situation puts Twitter between a rock and a hard place, as no other strategic or financial bidder has stepped forward and matched Musk's offer for the company. And Musk knows that, which is why in a changing market and with Tesla losing roughly $300 billion of market cap since the deal, we view the $44 billion Twitter deal as having less than a 50% chance to get done as of today, Eves said. And definitely because of this low probability of this deal, we have more and more uncertainty on the markets, and this uncertainty leads to much higher volatility and leads to the outflow of investors from quite risky and uncertain assets, and definitely Tesla is one of them. On top of that, on this article that was published also on Yahoo Finance on May 16th, and that is titled "There is no greater divide than the Tesla stock gap," we can see that we have a lot of pros and cons directly related to Tesla and its financials. But the price targets in between $250 and $1,620 is a very huge gap even for this type of company that is profitable for 11 consecutive quarters and that has very good guidance for upcoming years. But for now, I have to say that with these huge gaps, let me show it to you right here. According to TPRanks, we have the lowest price target at the level of $67 and the highest price target is $1,500. This huge gap brings even more uncertainty on the market. So, and what should we expect next from the Tesla itself? Let me show you right here on InsideEVs.com. We have this article that was published just several hours ago on May 16th, and it's titled Tesla's plan to restore full production in China is delayed a week, but things are getting better and the company sent another transport of over 4,000 cars to Europe. And I covered in one of my previous videos that Tesla should restore their full capacity of Shanghai plant by May 16th, and we are on May 16th, basically on May 17th. And this article shows that it's not so good with the Tesla plant. So let me quote you this. The Tesla Giga Shanghai plant in China is slowly resuming and increasing production, but it might take more time than initially expected to achieve full scale again. Reuters reports that according to an internal memo, Tesla's plan to restore production to levels before the latest COVID-19 lockdown is delayed by at least a week. According to the report, based on unofficial data, Tesla originally aimed to increase output to 2,600 Model 3s and Model Ys cars per day from May 16th, but it had to stick with a single shift operation and about 1,200 cars per day. The new timeline to reach 2,600 cars per day is May 23rd. There are many issues related to production in Shanghai right now. There are parts supply challenges and workers must leave and sleep near production lines to even be allowed to run a factory. But there is a positive news as well. According to media reports, with the number of COVID-19 cases decreasing, Shanghai intends to fully reopen from June 1st to mid to late June. And definitely this relief in lockdown in Shanghai might help Tesla plant to restore its full production rate, and definitely it should help Tesla to increase its numbers, to reduce basically their losses in numbers. And depending on this recovery, we have to be very cautious with upcoming quarter results, and that's why, in my opinion, we have decent possibilities to further headwinds. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, let me show you that right here we have several waves, and on the one hand we might have, this is our first wave, second, third, fourth and fifth. And if it is the case and we have the double bottom pattern, from this range we have to go higher, especially from this level that I mentioned previously. It is the golden pocket pattern, statistically the most probable range of trend reversal. But if I switch to 5 minutes time frame, let me show you this latest movement in details. And right here, as you can see, we don't have 5-wave structure. We have only, let me show it to you, we have only, this is our first wave, this is our second, third probably, and we have this as our bottom of the fourth one, and we have to have one more leg to the upside to complete this wave. Or in other case, in the bearish case scenario, we might have this as our ABC correction. And if it is the case, we should break the bottom of the B wave to confirm this layout. And if it happens, definitely we will retest the bottom of this price action at the price point of from $680 to $691. And if it doesn't hold, we will see much longer consolidation phase and much lower prices. That's why we have to be cautious, but still, from this range, we have the possibility of moving higher. And if you are risky enough, you can accumulate your swing trade position from this range with a stop loss slightly below this previous bottom, and it will give you about 6% of potential losses. But the upside potential for the next leg to the upside might be from, let me show it to this previous swing high of about 31%, and it is risk to reward ratio of 5 to 1, all the way up to 51 and even 59% to this previous swing high. And definitely from the investor standpoint, this asset is still very attractive, and if your investment horizon is longer than 1.5 or 2 years, definitely Tesla is the best contender for your money, and one of the best contenders of your money, and that's why you can accumulate on every daily red candle. So, I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life.